Right, what's the third profit lever? The third profit lever is capital growth. Capital growth, you may or may not know this stat, but over the last 90 years, the property market has gone up on average 7.9% per annum. Yep, 7.9% per annum. Now that means on average, property prices double every 8 years. Now, by the way, if you don't have to take my word on this. If you want, you can write this down. Go to Land Registry, House Price Data Index. That's where all land registry sales are registered. Here's a chart from the website. Right, and you see the average house back in 1969-68 was 3,600 quid. By 2020, the average house was £250,000. In fact, over that period we're looking at there's a 50-year period, the average house price went up by 8.5%, and last year it went up 10% in the UK. So we're probably up to 260 to 270 now. So these prices go up whether you believe it or not. They go up and people say, surely it can't carry on. When they say, I could show you a newspaper clippings from the 1920s and 30s, 1940s, 1950s, 60s, 70s, they'll never go up. It will, and it does, for many factors. We don't have time to cover here. In fact, I've done another video on house price data. You can go and watch it here. So, capital growth pays you forever, doesn't it? Forever. So it's got to be at the table. There's no point in buying a property in London that's got good equity growth but no cash flow, or cash flow when the mortgage rates go back up to the normal rates. Equally, there's no point in buying a property in, let's say, Hartlepool. People say it looks great on paper for cash flow, but it never gets any equity growth. Now you need both at the table, and if you've got both at the table, and only if you've got both at the table, you get the fourth profit lever.